You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
So the number one philosophy is you have to think of all stakeholders and you build the community, included, I haven't really talked about it, but the community you serve. So I was lucky, and the visualization of this is when I joined a company called Sage, who was market leader in the small and medium business accounting, paid about 70% of employees in the UK in the private sector, and a real kind of bedrock of the northeast of England, employing 2,000 people in Newcastle. I realized that was a huge opportunity to get the energies of our people, 15,000 people, really mobilized to support communities they served. So I established the Sage Foundation. I had a simple sort of tagline of 2 + 2 + 2. 2% of colleagues' time would be volunteering, paid for by the company. 2% of free cash flows notionally into charitable foundations, support causes for women and youth. And 2 technology licenses provided for not-for-profits for free and charities so that they could run their back office really efficiently, and all the funds coming in actually get donated and executed to causes they care about, whether it's kids in Africa, whether it's domestic violence for women, whatever it is, that they could run really, really efficiently. So this Sage Foundation, I think there's a lot of cynicism in the UK when I introduced this, and there was a lot of pushback, I'll be honest, from some of the finance teams saying, it's abstraction, it won't pay for itself, but literally 3 years later, it changed the company. It really became the beating heart of the company. It was a massive fact. I used to do sort of meetings, fireside chats for all new joiners. And I'd ask them, what was the factors behind you joining Sage? And about 40% of the people around the room who joined Sage, last 3 months, particularly the Gen Z and millennials, said, it's the Sage Foundation. There's very few companies in the UK that really stand out and clearly care for their communities and make a difference for the wider population. So I sort of, Peter, it's a long answer. What struck me when I was Chief Operating Officer of the UK government, and that was in the time of austerity and deficit reduction, we realised that actually governments, and it's even worse now, governments haven't really got the firepower without taking massive debt to make a huge difference in communities. Now, we want government to do that, and in a democracy, you vote for the party that you think will do the best job, hopefully for the wider population and the country, rather than your own selfish interests. Not always the case. But for companies, we are the wealth creators. We are the people who are creating all the opportunity, the exports, the growth. And I believe it's really fundamental we connect those companies within their communities and make a massive difference. So I was so proud and emotionally really moved when I saw the brilliant work in the Sage Foundation. We did similar in Microfocus and we did similar in Cordian, where we actually, an example in Atlanta, 1,200 people working in Atlanta, but massive still segregation, massive disadvantage for brilliant Black kids. So we did initiatives with Georgia Tech, and we did initiatives where we made a huge difference to that community. A lot of our people went volunteering in food banks. Down in South Africa, it was just amazing to see colleagues, about 60 colleagues, go and paint schools in Kliptown in Soweto. And also we fit them out with laptops and technology and teaching assistants to help these amazing, between 6 and 10-year-old Black kids who are just inspirational. And just give them the opportunity. I think it was Nelson Mandela he said, education's the best way out of poverty and the way to opportunity, or something similar. I paraphrased it and I apologize for that. But when you see companies at the heart of their community, it makes a massive difference. And the magic happens, and it comes back to what I said before, is this holistic plan. We used to have customers and partners coming on our volunteering days, and obviously I went on them. whether it's picking up litter in parks or helping out in terms of the floods in Northumbria and helping old people move their sofas up to the top floor, whatever it was, there was always an opportunity. And I think, Peter, now, particularly with the cost of living crisis, we've probably got going up from 2 million to 5 million people who are living on the breadline in the UK. I believe personally, you probably think I'm crazy, but I think a safe roof over everybody's head in a civilized country should be a basic human right. So I get deeply saddened when I go back to London now, when we actually fixed homelessness in the first lockdown. Not for the long term, not sustainably, but we actually took those poor people who are there for the grace of God. It could be me and you, with a few bad twists and turns and different situations in our lives. No one's immortal and invincible, and I just think companies are at the heart of that integrity, where we create all the wealth and the opportunity, and we should share that with a broader community. Now, if there's any investors out there saying, actually, it's a distraction, it's not core to the business, you should give it in greater profitability to me as an investor, I just say I refute that totally. And when you look at the greatest companies in the world, I'll give you an example. Salesforce, started by Mark Benioff 22 years ago. This year, probably a $30 billion revenue company. Totally transformed the category around customer management. But Mark has done huge amounts to try and solve the homelessness in San Francisco. Mark's created a Salesforce Foundation that's given probably tens and hundreds of millions of dollars to great causes. And every one of his colleagues around the world, he must, employ 50, 60,000 people, get at least 5 days volunteering where they make a massive difference to their community. And he's probably one of the most best performing US public companies there is out there. So all these things go together. It's never either or. Should I do the right thing, or should I just pump up quarterly profits? No, you can actually do both, but think in the long term, build it into your culture, delight customers, engage colleagues, make a difference in the community. And actually, in the long term, you build a hugely valuable company that generates massive returns for investors.
Yeah, I love that you've been doing that and have continued to do that throughout your career. I think the thing that the numbers that jumped out at me regarding the Sage Foundation was donating annually 75,000 days across the workforce. Annually, that's absolutely phenomenal how much work can be done in various communities with that sort of number. Yeah,
and again, actually, Peter, people are smart. People, if you're showboating, people get it. But if any CEOs are out there listening to this, I really would advocate you to take this seriously. And the good thing is, I let the team choose what are the three issues. It shouldn't be my pet project. I thought it's fundamentally and strategically important that we establish the Sage Foundation as a platform. But the specific issues, I'll be honest, I feel upset about lots of issues, from domestic violence, through the homelessness, through the lack of opportunity, through socioeconomic groups, through the challenge that ethnic minorities face. There's loads of things I'm upset about. But you've got to kind of pick one or two, and I let the colleagues pick what are the big issues you want to focus on. Some companies do that, and they have a charity of the year. But to mobilize the energies of all your tens or hundreds or thousands of people within your company to be aligned around that becomes really important to the culture. And you can measure it as well. So it's much easier to recruit people because you've got a fantastic brand, and part of that brand is caring in the community and making a massive difference. And that kind of beating heart of social purpose. And also you can measure it in terms of engagement and retention of colleagues. And when, magic really happens when you go on a, in those days, Sage Foundation event. We went and cleared a massive Girl Guides camp down off the M25, and we had customers and partners there. And the key thing for a CEO, you've got to be authentic. I haven't really talked about this, but probably the most important guiding star, your North Star, has got to be your authenticity. And therefore, I know I'm a busy guy, but I'm taking clearing that day, and I'm going down to help the team, and we're picking up Russian knotweed and all that sort of stuff, things that I'm not very competent at. And also it's nice for your colleagues to see your vulnerabilities. And as a CEO, I'm not the smartest or the most handy person in terms of carpentry, all these sort of things. So I just muck in with the rest of the team and show my incompetencies and, have a laugh about them. But I think the important thing is you've got to lead from the front, but you've got to do that. You can't, the say and do thing, you've not only just got to say stuff, but you've got to do it. And as a CEO, they want you to see you roll your sleeves up, get in there with the troops in the trenches and do the right thing. And if you do that, then I think people really value that authenticity and that integrity, and it builds huge loyalties. And that's how brands become, brands for life. And they have not just colleagues and customers, they have raving fans and advocates and people who really carry their flag.
Yeah, love that. Right, Stephen, I want to change it up just a little bit, if I may, and ask you this. Please, can you share with us your personal investing style, strategies with your own ISA and your own SIP, if you have any, please?
Yeah, and I do two sort of things. I invest quite heavily in angel companies, tend to be around things like net zero, sustainability, things I care about. So I sort of have a moral compass that I want to invest in businesses where they'll make a massive difference and really kind of move the dial in terms of particularly around sustainability, net zero. So I'm invested in the algorithm people. I chair that company. Health tech, again, is an area with Locum's Nest where I've invested. There's a number of companies, and I've actually co-invested with my great friend I mentioned before, Steve Garnett, in a number of those businesses. And we've seen unbelievable performance by great CEOs where we've been lucky to mentor them. And some of the returns have been, genuinely eye-watering, 10 and 20 times return over the period of those companies. And it's been amazing and rewarding to see young CEOs build companies and build huge value and do the right things in their own businesses. So there's a lot of private investment I do. And then secondly, public investment. Typically at the moment, I'm probably heavily invested in US denominated stocks around technology and growth stocks, because I think, actually people, the FTSE, whenever I look at it, is just, I looked at it for 10 years, is, shifting between 6,000 and 7,500, it's flatlined. 10 years ago, it's probably gone up 20%. 5 years ago, it's flatlined. You look at the NASDAQ, in 10 years, it's gone up fourfold. In 5 years, it's doubled. It's had a bit of a correction this year, and you see all the people celebrating in the UK press that the FTSE's done well. It hasn't. And it comes back to that culture of, I'll be honest, I wouldn't want to invest in companies that give dividends away, because it means the management team have run out ideas how to grow the company. Growth companies, as I said, you either grow fast or you die slowly. And zombie companies are not great to invest in. And where they do stock buybacks, special divvies, dividends, and people salivate over a 3% dividend, honestly, if you choose that, that's fine. I respect that. But I don't think that's the way, in terms of managing a portfolio for the long term, that's going to provide superior returns. I may be wrong, but history's sort of proven me right. And I would have, as I did, invest dollars in growth companies with a philosophy that they want to become market leaders. And they have obviously huge TAM, total addressable market, in multi-billions, with great management teams, ideally who have done it before. Because obviously, I would say as a first-time CEO, I made tons of mistakes. Second-time CEO, I did a little bit better. Third-time CEO, you still make mistakes, but you get better and better. And you get in the groove. So if you've done it before, it's better. So I'm sort of very weighted towards themes of net zero, sustainability, the cloud in terms of computing, and also geared towards US companies in terms of my public company investing. And I think those UK investors who are looking across the pond, obviously, reality is the dollar seems to be getting stronger. That seems to be the case. And there's loads of reasons for that at a macro level, political level. And, in terms of the growth companies, I'd say stick to really growth as a key theme, because they'll be the companies that provide just unbelievably superior investment. And it's not like the difference is if the stock goes up 3% in a year, it's mildly interesting, but if it doubles in a year, it gets very interesting. And those technology stocks are still out there. And, the world we know, particularly with COVID, it probably created more digital disruption in 18 months than it did in the previous decade. Now the platform is there for a new paradigm around the cloud and mobility and devices like this, kind of allowing everybody to have a different way of running it as a consumer and as businesses. So I think there's huge opportunities in some of those areas. And I mentioned some of the great companies out there like Salesforce, ticker symbol CRM. I think you'd be unwise to bet against those companies.
You touched on several significant and important points there, Stephen. I want to go back on two. You've said it twice regarding buybacks and running out of ideas, and then you've also touched on the dollar, getting stronger and stronger and stronger. I think at the last point it was down in the last 12 months, something like 17%. The sterling is down versus the dollar. Now, does that leave us wide open then to takeovers? We've currently got a situation with your former company, Micro Focus, looking to be taken over by a US company. Heaven forbid, somebody else comes in for Sage at some point. We'll have nothing left in the FTSE, for predators coming to take them over.
Yeah, and it's disappointing. I said, sadly, for my previous company I left 12 years ago, Micro Focus, we built a great team. We really, probably maybe books will be written about what the team did there. But they transformed that company from being a sort of old-fashioned, stodgy British company that didn't have any technology or innovation at its heart to being kind of the market leader around application modernization, starting to move big workloads to the cloud, and just innovation and bringing customers into the room and changing the culture. And, we had a phrase around the company, what we wanted to do in terms of the vision. And it was for the next 3 years, we wanted to triple. So it's 3 by 3, three times the size of the company. And the team smashed the ball out of the park. Resulted in impact for shareholders. I think the stock under my tenure went up by 7-fold in those 3.5 years. So it started at 70 pence and it ended up around £5. So everybody was happy, and great friends I still have. The folks at Standard Life up in Edinburgh, many of the investors that trusted me, and I really appreciate their trust at the time, got fantastic rewards. So I think coming back to that, Peter, to your question, is I think it is genuinely around backing management teams with a big vision to become market leaders, and then the execution and the plans to make that a reality with an incredibly vibrant meritocratic culture where they do embed, not just the obvious things like honesty and table stakes of integrity, but they really think about innovation, doing the right thing, having truth and transparency embedded into the culture, and making that a huge success. And then it does affect the philosophy and building a board that actually get it, have got domain experience, have done it before, can add some value. And I think, I'll be honest, in the UK, we've got a lot to learn there. And I think when I see my US boards, even 20 years ago, they were light years ahead of some of the UK boards. And I do think, directly to your question, obviously, why sterling gone down, there's and the euro as well. So I think in times of crisis, people fly to the dollar, safe currency of the greenback. But there's other factors. We've got one of the biggest balance of payments deficit. I'm to be honest, Peter, this is the first time in my life when there's been a balance of payments deficit at the size it is now, where the government haven't mobilized and had a massive export-led growth strategy. If you go back to the 70s, 80s, 90s, when there was any devaluation of sterling, that was a catalyst for the government and business to say, how do we really become famous for exports and have an export-led growth strategy? And obviously, our goods against the Americans are 17% cheaper, as you rightly said, today than they were a year ago. Now, the bad news is the press are portraying everything around the energy fuel rise as all global factors. Well, hang on a minute, we buy oil and gas in dollars. So sterling, denominated currency, us, have to pay 17% more today than we did a year ago. So some of that inflation is our own doing. And what we need, obviously, hopefully now, fingers crossed, is a more stable political environment, because that doesn't help sterling either. But also a really good long-term plan to be famous at a few things and build some infrastructure that really is meaningful, have an export-led growth strategy, and really get behind business and growth, which is so fundamental to the UK's success in the long term, and the currency. And then the final point, obviously, as someone who's been involved in technology forever, and coming back to choose to live in Britain, and seeing the amazing success of British technology in the last 10 years, which has been a game changer. So I'll give you, just roll out some of the data. There's over 10 decacorns, $10 billion companies. Brilliantly, about half of them are founded by immigrants, which is fabulous, because we are a multicultural, cosmopolitan, and we want that to be a magnet for all the global talent around the world to come and live and set their companies up in the UK. There's 122 unicorns in the UK. That's companies valued at $1 billion. That's more than the whole of Europe put together. We had over 30 billion of VC investment last year in technology startups and scale-ups in the UK, which again is just behind. The only two countries ahead of us is the US and China. So we're punching way bigger than our weight relative to the big European countries, and we want them to be successful, obviously, but it keeps us on our toes that we've got to be more successful. But what we seem to lack is that DNA and the gene around how do we go on to become global market leaders. And sadly, there's probably too many boards who throw the towel in early and give up rather than go the long haul. Because when you go the long haul and you become a global market leader, then you've got huge influence and typically a massive valuation. That's no surprise that there's a few kind of companies around $1 trillion in the US that have achieved kind of the dream around that. So I think, truthfully, Peter, back to your question, this is a shopping bonanza for US companies to come and look at UK companies. They've got 17% cheaper where the fundamentals haven't changed at all. And sadly, that's going to undo some of the great work of what's happened with the London Stock Exchange. And actually, the government, I think, in this area has done a pretty good job of encouraging the UK to be a magnet for listing companies. And there was some good in the last 3 years. There's Canadian companies, US companies, a lot of European companies, people like Trustpilot, who have listed on the London Exchange to make it a real kind of magnet for public companies. Now, why is that important? One is, I think it's good to have role models, but number two is there's just a whole ton of jobs in the City of London around advisory service, banking services, legal services, accounting, that actually create this ecosystem. And in Sage, we used to think every job we took on directly created about 3 jobs in the ecosystem. So that's why it's really important for us as a company to be listed on the London Exchange. And it is a shame to see some of these companies throw the towel in early and choose to, exit. Now, final thing I'll say is we need to change the philosophy there. Because when I was in the US sitting in the boardroom in California, and it's the same for all US companies, it's just about how do we become a global market leader. We don't obsess about the exit. We don't really talk about the exit. We just talk about who we're going to acquire, how do we grow organically, what product lines we should launch, what international expansion, and then focus on how we do that successfully. So you do beachhead to beachhead, and you don't try and be all things to all people and sort of fall flat on your face. So it's all about execution. But the philosophy and the DNA of the board is all about growth and ultimately becoming a market leader and serving all stakeholders and doing it the right way. And then, the happiest people are the investors, because they see the benefit of, companies that actually seriously, for the long term, double their stock price every year or grow by 60% per annum. And that's a game changer if you've got portfolios with those stocks in. So in the UK, when I came back to Micro Focus, I went to a couple of board meetings of companies I was involved in where I invested. And one of them, an individual said, it was early stage company, said, well, we want to know what the exit strategy is. And I was just gobsmacked. I just like, what, this is like kind of schoolgirl error number 101. What we're here is talk about what's the product market fit? What do we want to do for customers? How do we hire the best people? What are the plans that will make us the leader in the UK, first of all? And then what's the overseas expansion strategy? That's where we need to obsess as board members. And that's where we need to support management and then let management have the space to get on with it and execute the plans and the strategy. But the philosophy is so, even now, different in the UK. And so, the pleas I'd make would be, one, boards, think about how you become global market leaders. If you haven't got enough expertise of doing that on the board, go and get some other people, bring some UI, try to bring US people into my public company boards in both Micro Focus and actually Sage. People who have done it before, people who have seen the movie before, been the director of the movie before, built companies, gone global, become market leaders, category leaders. Bring them into the room with domain experience and they'll tell you kind of the lessons learned with the scars on their back. And then secondly, I think it's just the philosophy of, maybe, I'm not saying it's always the case, but there may be a time where you do run out of ideas of how to grow. And if that's the case, sadly, you have to sit there and be honest and say, well, if it is a time to accept an inbound conversation and an acquisition, then so be it. But it is sad to see that so many UK companies don't have that final mile of energy to become the global market leaders. And definitely in the early days of the company, I wouldn't even spend, when I get decks from companies looking for investment, if they talk about the exit strategy, I'm not interested. I wouldn't invest. I want to see entrepreneurs, founders want to live their dreams with their big idea and go on to change the world and become the global market leader. That's what it's all about. And that's how you create huge value.
Brilliant. Love that response, Stephen. Thank you so much. Now, June 2020, keenly regarding your own strategies and passion for investing and all tech, you became the chair of Technation. Please can you share with us an overview of your role at Technation and its role in the UK and global tech economy, please?
Yeah, Technation, it's a sort of unsung hero, I think, and credit to Gerard Gregg, who founded it way back in 2014 down in kind of Shoreditch, just above a Barclays office in the East End of London. And that was the start of sort of Silicon Roundabout. And just to see the 122 unicorns, I met some of the guys at a company called Zilch last week, bumped into Comply Advantage Charlie there. And the great news is today we should celebrate. 10 years ago, there wasn't the community of entrepreneurs and tech entrepreneurs and, on paper, billionaires who are building amazing companies. Why is this important, Peter? The UK now employs 5 million people in technology. Technology before the pandemic was growing 6 times faster than the rest of the economy. The government talks very openly about leveling up, strong regions, high skills, high wages, all the answers around technology. Technology folks are paid on average 10,000 median salaries more than other professional grades. We're seeing an amazing ecosystem of companies grown by brilliant founders. I've been up in Edinburgh recently. I've been in Manchester, back in the Northeast, out to Belfast, down in Cardiff. You look around Bristol, you look around these regions, and there's these beacon of lights that started sort of 8-10 years ago that have created a following of fabulous technology companies. So it's really important. And right at the heart of that is Technation and its partners. And what Technation has done is build brilliant programs to address some of the systemic challenges that companies face as they grow and scale. So it's not easy to go from 0 to $1 million of revenue, I wouldn't argue. But when you go from like 1 million to 10 million, that's sort of Death Valley. And as we said before, there's not many companies in the UK that have then gone on to be global market leaders and have companies that are worth 50 billion and 100 billion of that scale. And that's the opportunity. So that's what Technation's really focused on, is really helping those scale-ups. And there's three things that they really struggle with as scale-ups. One is access to capital, growth capital. Secondly is around leadership development. And thirdly is going internationally and taking their UK market presence into overseas market leadership globally. So we've built a lot of intellectual property, a lot of mentoring, a lot of coaching, where folks who have done it before come back into the Technation community and teach the next generation of folks how to do it and how to grow and scale and get capital. And it's easy. Well, it's not easy, but it's easier in London, particularly if you're a white male founder. It's tough, if you're out in Belfast or Glasgow, and particularly if you're from a minority community, it's really hard to get access to capital. And, I've got all the data. It's like you have to do 50 times as many pitches. The barriers are significantly more. So what we want to do is have a much more synchronized marketplace for access to capital. And I think that's come in the UK, but make it much more equal around how that capital is shared out across the regions and across different minority groups, and help those companies really do a great job of pitching for capital, and then help them around leadership development as they scale. The challenges when you're $1 million company with a dozen people are very different than when you're, $10 million and even $50 million, $100 million to $1 billion. The challenge is scale, and at points you have to put process in, you have to hire an FD, you have to put much more formal processes around some of the HR processes to really get the best out of your human capital. So there's different challenges you face in the journey, and it's really putting all that together, building the playbooks, building the content, and sharing that with the UK tech community. And I'm really pleased that many of the alumni of Technation have gone on to be hugely successful. So the Monzas, the companies like actually Ocado, Darktrace, some brilliant companies. And there's a lot within the alumni now that we think in 3 to 5 years' time will be the unicorns of tomorrow. So that's what it's all about. And I'm very privileged and humble. And obviously it's a very, very natural place for me to be leading the board to support the management team to build the best programs that actually are probably the envy of international governments around the world, of how the UK has really cracked the code on this. And, the numbers speak to it in terms of the massive investment in the UK of over $30 billion, 122 unicorns, the growth of the tech sector and high value jobs. And if you go up to Farringdon or anywhere now, they hang out in a kind of coffee bar. Everybody's in technology. And 10 years ago, that wasn't the case. They were in kind of printing or media, or, still there's some great hubs around digital media. But I think there's a statement out there with a prediction that by 2030, 50% of the employment in the UK will be either creative industries or digital economy. And I think we're well on the way to that. We want to build that because it creates high value job, high skills, better education system, and also much more resilient, stronger regions, and all the things we care about in terms of building a better Britain.
Brilliant. I love that response. And I'm going to ask you two final questions. I'm conscious of how long we've been speaking. Now, you said 2030, Stephen. Is that a target with regards to what you've recently said about you believing that the UK has the potential to become the most powerful tech and superpower of the world?
Yeah, I think there's a lot of pieces that come together to support that, Peter, but there's a lot of hard work to do. I think with the new government, it would be fabulous to have some really long-term plans. And governments, when I was CEO of government, we went and looked at probably the two best governments in the world in terms of the digital agenda, Estonia and Singapore. Now, people say, and they're right in some ways, that Singapore is the ultimate free market economy. Well, hang on a minute. There's an incredible government in Singapore that has long-term plans shared with all the stakeholders in the private sector. Everybody's bought into it, but things don't happen by the market economy. You don't, we've sort of in the last year or so, and we're now sadly suffering from the consequences of it. we haven't really had an energy strategy where we build resilience, low-cost energy, support our path to net zero. The only way you do that is have like 10, 20-year plans, like transport, rail network. You go to Italy, you go to France, Germany, the railway network's just better. It costs a tenth of what it costs to travel on the UK rail network. And why is that important? Because if you want to get to net zero and you want to stop plundering the planet and you want to leave a fantastic planet for future generations, you've got to really take decarbonisation seriously. So it means we do need to get off the roads and we need to get into, so there's a lot of things. Digital's another one. You've got to think long term on some of these things. Some of the things, will happen, but there needs to be some long-term plans around infrastructure, around investment, around energy, around water, around technology, around digital, even things like the role of the high street, whether it's important for communities. If you do nothing and leave it to the market, you'll turn around in 2, 3, 4 years' time and come out with a load of unintended consequences, which will sometimes be disastrous. And now we're suffering the consequences of that. So an example would be the energy hikes that we're seeing. Now, I'm not necessarily, I guess, philosophically a big fan of it, but the French 20, 30 years ago put together a very coherent energy strategy based on nuclear power. And therefore, energy prices in France have gone up 4%. It's very different. They're not dependent on the gas pipeline that Germany's dependent on. So governments play a key role in this. And I think government not only sets the environment, the positive narrative, the importance of for digital and technology, that the UK becomes a magnet around the world that's incredibly inclusive, incredibly welcoming, really loves not only just the investment from the Americans and overseas nations, but the talent to come here and actually build companies in the UK, found companies, becoming global market leaders, as we talked about. So you do need a plan and you need a narrative that supports that plan. And I think we need to see both public, private sector and the third sector get on the bus and support that plan. Because I'm a huge optimist in terms of the UK and the assets we've got. And the reason why we love, our sense of humor, the culture, the openness, we travel well. It's an incredible, amazing country to grow up and be part of. And I think for technology companies, I do think it could be a golden era. And I am massively optimistic. But now with the new government coming in, you sort of alluded to this, it is a perfect time to establish that springboard, set the narrative, to come up with long-term plans that not only deliver for the long term, but also address some of the short-term solutions and get through some of the crises we face. Obviously, it'd be great to see technology be a really critical part of the solution for Britain. And I think that is the case. And if we do that, there's no doubt we could become a science and technology superpower. But it's ours to win and it's ours to lose. And we've got nowhere else to look apart from ourselves in terms of the responsibility of making it happen.
Well, there may be a call you'll be getting in the next few days from Liz to join the digital transformation team, mate. You never know. I think that's a possibility. Now, I've got a final question for you, Stephen. Technation's Future 50 and Upscale Growth Programs for tech companies was recently named the UK's top business accelerator by Bolhurst, the UK's high growth data platform. Stephen, having achieved so much from such a humble beginning, what would you tell the budding investor or startup founder that's currently facing uncertainty or adversity?
So on two-part question, really, I'd give full credit to the team. I'm just very lucky that I sit in the background. And one thing I was taught early on is, in times of crisis, you need leaders at the front of the stage. But when things are going incredibly well, you just want to get off the stage, put the team up on the stage and let them just enjoy and savor the moment. So Gerard and the team at Technation have done a fabulous job. I would take no credit for that. They've done a brilliant job. They've worked their socks off to build the best programs that really are the envy of the world in Technation. And we know that because loads of overseas governments and capitalists and investors come to the UK to spend time with Gerard looking at what we built. So that probably is the gold standard, and that's all credit to Gerard. In terms of the other element, I think, yeah. So repeat the second part of the question, Peter.
So the second part of it was really asking you about, as a budding investor or a startup founder that's currently facing uncertainty or adversity, what advice would you give to them?
I think so. Probably find someone who's been through your nightmare that you're going through now. And actually, I people are so generous with their time. If you get, and there's loads of ways to contact people, either social media or just reaching out to people. People are unbelievably responsive, I think. So number one, those voices in your head, that imposter syndrome that says, "Oh, of course that person wouldn't help me." Put them away. Give it a go. Who dares wins? You don't lose anything by trying. So I'd find someone who's done it before. But then I think, hang on to your big idea. What was it that kind of got you up in the morning and out of bed at 5 o'clock and you wanted to change the world with your big idea? And if that's still relevant now and there's a really strong product market fit and your customers really want it, then you've got to find a way to carry on. I think the biggest challenge you have as an entrepreneur is to know when it's not going to work. And there's no easy science on that. But you want to road test it and make sure it is going to work. But if the data says, the market's not ready, the customers aren't ready to buy what you're offering in terms of service and products, then you might have to rethink and you might have to go on to another idea. But generally, I think, if you're facing significant, obviously, at the macro level, you pick up the papers every day, it's kind of all bad news. Apart from the kind of lionesses, there's been very little good news in the summer in the UK. But, I think, what we love about the entrepreneurs is the resilience, the tenacity, the belief. When you get that and then have that sense of optimism, you can move mountains. And obviously, you need, I'd say at the moment, the advice I give you is try and get a cash runway of maybe 18 months, 24 months. So you're not going to run out of cash, because it's a terrible shame if you're doing really well in the business, you're winning new customers, loving customers, building great product, innovating. If you run out, if you have a cash crunch, that have to, do a down round or something like that, that's seriously damaging. So kind of think about the fundamentals, think about your cash runway, and then, what I would say in the bad times is don't obsess about the bad news, because as entrepreneurs, we're optimists. You've got a big idea. That optimism is infectious. And with that tenacity and resilience, you'll get a volunteer army of colleagues and customers who really believe, like you, that your product or service can change the world. And then just kind of be unleashed on that journey. So don't be too depressed about what the macro news is. There's always, sadly, we're just, bombarded with social media and stuff, and it's very rarely about kind of good news, or people just give cameos of all the good news in their life, and it's kind of not real or authentic. But that you've got a big idea, you've got a belief, and that's why you get up in the morning. So double down on that, and then have a checkpoint. I would, every 3 months, is it working? If it's not, what needs to change? But ultimately, if it isn't working and you've given it, 6 months, 9 months, or a year, and you've run out of ideas, then could you go and do something else that really has much more chance of success? And what have you learned from your experiences? As humans, we're not very good at sort of lessons learned and changing it next time. It's definitely worth creating some reflective time to do that.
And with regards to the investors, Stephen, that are seeing red on the boards at the moment regarding their stocks and the shares and the funds?
Yeah, I think personally, I think this is, and I'm sure you've heard from Warren Buffett and Anthony Bolton, all these guys, luminaries in the investment world. I think it's a great time to look at the fundamentals. And I personally, actually, Peter, have published a blog about this. I think it's a great time for companies to IPO. And obviously, everybody says the IPO window is shut. Bankers will advise you to hunker down and come back in 2023 if the market improves. this is a golden time. If you've got a great company and you've got visibility of the next 8 quarters, that you know you're going to be the beat and raise team, and you can kind of set expectations, beat expectations, then this is a great time. You'll get so much attention. You'll get PR. You'll be a darling of the investors. And again, companies that are very successful think about this for the long term. They don't think transiently just for this moment in time. They think about 2025, 2030, being a company there for investors through the whole kind of journey of value creation. But for investors who have got a lot of red on the screen, obviously you probably look at it daily, maybe hourly, maybe even every other minute. But I kind of stick to the themes, your investment hypothesis, and I would personally advise you to look for high quality companies with amazing customers, with a big idea, with brilliant management teams, and really on a growth agenda to market leadership. Because those companies won't let you down. Even if demand softens, you might have one step back, but soon pick up, it'll be 2 steps forward and they'll be back to growth. And when you get those companies with high double-digit growth, then you'll see the valuation of those companies follow the top line growth of the company's revenue curve.
Brilliant. Love that response, Steve. Now, with regards to the blog you just mentioned, is that going to be on the Technation website or somewhere else they can find that?
Yeah, or actually, if you want to follow me on social media, I typically do most of my social media myself and respond directly myself to messages. But it's S Kelly at S Kelly CEO. So it's on all the platforms: Instagram, Facebook, Twitter. Main ones tend to be LinkedIn and Twitter for that sort of thing. So the blogs are on things like LinkedIn. And then I share them on the other platforms like Twitter. But if anybody wants to follow me, I guarantee I'll follow you back. And it's just at S Kelly CEO.
Brilliant. Now, Stephen Kelly, chair of Technation, former CEO of Cordiant, Micro Focus, and Sage. It's been an absolute delight having you on here. I'm sorry I kept you so long, but I just had to make sure I've tried to cover everything. So thank you ever so much for your time, Stephen. I really, really appreciate it. Thank you for being on this Investing Matters podcast with me.
Yeah, Peter, a joy to speak with you. Love the chat. And also, I think you do amazing work. So I've listened to a few other episodes. I hope the audience enjoy the episodes as much as I have, because I think, you're really getting the right conversations out there of things that matter.
Really appreciate that. Thank you ever so much, Stephen. I look forward to speaking to you soon as well.
Take care, Peter. Thanks very much.
Take care. God bless.
Thanks. And you.